Good afternoon, investors. You are now on KleverStock with me, Anunjaria, and I will be serving you the midday roundup with the latest market updates from this morning up until now. Kicking it off with the Bursa Malaysia updates. Bursa Malaysia opened lower on Wednesday amid lackluster trading, with the benchmark index slipping below the 1,670 level. At 9:07 a.m., the FPM KLCI eased 3.06 points or 0.18% to 1,669.26, down from Tuesday's close of 1,672.35. The benchmark had started the day 0.88 of a point lower at 1,671.47. Now, on the broader market, gainers led losers 172 to 144, while 274 counters were unchanged, 2,059 remained untraded, and 10 were suspended. Turnover totaled 121.35 million shares valued at 71.53 million ringgit. Rakuten Trade Sdn Bhd Vice President of Equity Research Tong Pat Leng expects the index to hover within the 1,670 to 1,680 range today, after the FPM KLCI's mild correction to end lower yesterday after a powerful run-up over the past month. He added, "We view this as a healthy development and expect the local bourse to resume its uptrend anytime soon." Among heavyweight stocks, Maybank gained 2 cents to 10 ringgit and 72 cents. SD Guthrie rose 3 cents to 5 ringgit and 65 cents. Sunway added 1 cent to 5 ringgit and 63 cents. Public Bank and Hong Leong Bank were flat at 4 ringgit and 52 cents and 22 ringgit and 74 cents respectively. CIMB, TNB and IHH Healthcare declined by 4 cents each to 7 ringgit and 95 cents and 13 ringgit and 54 cents and 8 ringgit and 61 cents respectively. Now, on the most active list, Pharma Niaga and Alam Maritime both edged up half a cent to 28 cents and 13 cents respectively. Dufu Technologies surged 11 cents to 1 ringgit and 86 cents. GCY International rose 2 cents to 37.5 cents. Notion VTech advanced 5.5 cents to 62 cents. And Capital A slipped 1 cent to 43.5 cents. Among top gainers, Far East Holdings surged 20 cents to 4 ringgit and 40 cents. IGB jumped 15 cents to 3 ringgit and 20 cents. Hong Leong Industries appreciated 14 cents to 16 ringgit and 42 cents. Sarawak Oil and Vitrox expanded by 6 cents each to 3 ringgit and 84 cents and 4 ringgit and 24 cents. Top decliners included Nestle, which had a 1 ringgit and 30 cent discount to 119 ringgit. United Plantations improved by 16 cents to 30 ringgit and 32 cents. PPB decreased 10 cents to 10 ringgit and 56 cents. And Kuala Lumpur Kepong fell 8 cents to 19 ringgit and 70 cents. Moving on to our local currency and foreign exchange. The ringgit opened slightly lower against US dollar on Wednesday as investors stayed cautious ahead of a busy week of US labor market data. At 8 a.m., the local currency inched down to 4.0475 or 4.0745 against the greenback from yesterday's close of 4.0445 or 4.0495. IPPFA Sdn Bhd Director of Investment Strategy and country economist Muhammad Siddiq Jantan said traders are keeping a defensive stance, which tends to weigh on emerging market currencies such as the ringgit at the start of the day. Among the US economic data highlights for this week are the job openings and labor turnover surveys, JOLTS, and ADP employment data. He said the broader backdrop for the dollar is becoming less supportive. The late December rebound has lost momentum and markets are positioning for US interest rates to remain on hold later this month, which would gradually erode the dollar's yield advantage. As that plays out, Malaysia's strengthening trade flows and resilient domestic demand provide a fundamental anchor for the ringgit, helping to limit downside and stabilize the currency as global sentiment normalizes. At the open, the ringgit traded higher against a basket of major currencies. It strengthened against the Japanese yen to 2.5836 or 2.5902, gained against the euro to 4.7303 or 4.7420, and rose against the British pound to 5.4637 or 5.4772. However, the local currency traded mixed against ASEAN peers. It edged up against the Indonesian rupiah to 241.5, 242.2 and increased against the Singapore dollar to 3.1604 or 3.1684. The local note slid versus the Thai baht to 12.9678 or 13.0094 and remained unchanged against the Philippine peso to 6.83 or 6.85. Now for some economy news. Geopolitical tensions in Venezuela triggered by a U.S. military strike and the capture of President Nicolas Maduro have helped drive renewed risk appetite in the global crypto market, lifting Bitcoin above $93,000 on Tuesday for the first time in 3 weeks. Bitcoin's sharp price swings and a steady increase in institutional involvement are set to remain major drivers of the global cryptocurrency market in 2026. This was said by Luno, a digital asset platform. This comes amid ongoing macroeconomic and geopolitical uncertainties, which continue to contribute to market volatility. In its latest market outlook, Luno said Bitcoin, the world's largest crypto by market capitalization, extended its rally last year to reach an all-time high of $126,200 in early October on its platform last year before retreating to open 2026 at $87,825. The reversal, it noted, reflected a confluence of market pressures, including leverage-driven liquidation, significant outflows from Bitcoin exchange-traded funds, softer expectations of U.S. Federal Reserve rate cuts, and signs of a weakening labor market. Bitcoin recorded strong gains of 160% in 2023 and 125% in 2024. The crypto market gained momentum from Bitcoin exchange-traded funds approvals in 2024 and was further supported by Trump's crypto-friendly stance, generating $802 million for his organization in early 2025. Luno Malaysia's Senior Business Development Manager Benjamin Chuang said crypto markets today are highly interconnected with global macroeconomic signals and geopolitical developments. While short-term price movements may remain volatile, institutional participation and clearer regulatory frameworks continue to underpin longer-term growth. Chuang said cryptocurrencies are increasingly being viewed as a portfolio diversification tool, a shift reinforced by growing recognition among major financial institutions and assets managers. Continuing with some local news update. Bank Negara Malaysia will inject an additional 2.5 billion ringgit into its fund supporting small and medium enterprises (SMEs), following Prime Minister Datuk Seri Anwar Ibrahim's New Year announcement on the fund's expansion and a new credit guarantee scheme. In a statement, Bank Negara said, as announced, an additional 2.5 billion ringgit will be provided under Bank Negara's fund, with the focus on channeling these funds to first-time borrowers. Bank Negara said it has already provided 32.4 billion ringgit in concessional financing to support SMEs through participating financial institutions. The central bank said the upsize increases the total allocation under the fund to 34.9 billion ringgit. Moving forward, Bank Negara will transition towards guarantee-based support, targeting guaranteed financing amounting to 10 billion ringgit. The transition to credit guarantee schemes aims to benefit a wider segment of SMEs, including first-time borrowers and new entrepreneurial activities. The scheme will be implemented in collaboration with Credit Guarantee Corporation Malaysia Berhad and financial institutions. We'll now take a short break, but don't go away. We will return shortly with more corporate news developments. Welcome back to the Midday Roundup. Let's continue with more local corporate news developments in Malaysia. Operating levels in Malaysia petrochemicals industry are expected to stay low, keeping profit margins under pressure across the olefin and polymer segments. Maybank Investment Bank Berhad, Maybank IB, said prices for olefins and polymers are likely to continue trending downward in 2026 as global oversupply from new production capacity weighs on the market. The bank noted that cumulative net capacity additions from 2025 to 2028 are projected at 49 million tonnes per annum TPA, higher than the 30 million TPA added in the previous 4 years, with 2027 expected to be a record year for the new startups. It said this wave of supply growth is occurring against a backdrop of only moderate demand recovery, particularly in China and other key downstream markets, limiting the industry's ability to absorb new capacity. The bank maintains a negative outlook on the sector with sell ratings on both Petronas Chemicals Group Berhad and Lot Chemical Titan Holding Berhad. Maybank IB added that the capacity closures announced so far are unlikely to be sufficient to offset the oversupply environment. South Korean petrochemical companies, for example, plan to close 2.7 to 3.7 million TPA of naphtha cracking capacity with government support, far short of the 25 million tonnes that the world needs to balance the market. Now, meanwhile, China's anti-involution plan could see a 30-year-old plants phased out by 2029 and those that are 20 years or older reviewed for emissions and safety standards. Maybank IB noted that this may not be too significant, as only 9% of China's capacity will be over 30 years old by 2029. It said capacity closures announced so far are unlikely to be sufficient to offset the oversupply environment. We estimate 25 million tonnes of more closures would be needed by 2028 to bring the petrochemical cycle to mid-cycle spreads. Maybank IB said overall operating rates are expected to stay low. Any significant price recovery is likely to be delayed until after 2027, when new capacity additions slow and supply-demand dynamics gradually stabilize. Up next, we have some business news update. The recent dig in the crude palm oil CPO price is expected to be short-lived, with price recovery expected soon. Hong Leong Investment Bank Berhad HLIB said the recovery will be supported by seasonally lower cropping patterns, the onset of La Nina conditions affecting palm oil harvesting in Brazil, and renewed concerns on palm oil output growth in Malaysia and Indonesia. Other factors that will drive recovery in CPO price include the implementation of the B50 biodiesel mandate in Indonesia and finalization of the US biofuel mandate for 2026 to 2027. HLIB said data from the World Meteorological Organization showed that there is a 55% probability of crossing La Nina thresholds between December 2025 and February 2026. The firm said historically La Nina brings above normal rainfall across Southeast Asia and drier conditions over in parts of the Americas, particularly Brazil and Argentina. If materializes, such weather patterns could weigh on global edible oil supplies. In Southeast Asia, excessive rainfall may disrupt palm oil harvesting and logistics in Malaysia and Indonesia due to excessive rainfall, while delayed soybean planting and weaker early crop establishment may occur in Brazil and Argentina amid reduced precipitation. It added that concerns over palm oil output growth in both Malaysia and Indonesia will likely resurface due to several reasons, including aging tree profiles and slow replanting, alongside limited new land expansion arising from Indonesia's moratorium on new planting since 2018 and Malaysia's sustainability pledges. The Indonesian government's move to take over more than 674,000 hectares of oil palm plantations will likely curb palm production in Indonesia and deter further investments in the country's oil palm plantation business. The firm maintained its CPO price assumption of 4,200 ringgit per tonne for this year. HLIB also reiterated its overweight stance on the plantation sector, supported by a constructive outlook for CPO prices over the near to medium term. It also said we prefer planters with greater exposure to Malaysian upstream operations, given their high leverage to CPO prices and minimal exposure to land confiscation risk. Our top picks are SD Katri Berhad, with a buy target price of RM5.76, and Hub Sang Plantations Holdings Berhad with a buy target price of RM2.31. Finally, wrapping up, we have major corporate developments and deals across Malaysia. IGB Berhad has proposed a 142 bonus issue involving the issuance of up to 679.1 million new shares based on its current share base of 1.36 billion shares, subject to regulatory and shareholder approvals. Iskandar Waterfront City Berhad has received Bursa Malaysia's approval for its proposed regularization plan, comprising of debt settlement and capital reduction to exit its affected listed issuer status. HSS Engineers Berhad confirmed that its 30% owned associate HSS Integrated Sdn Berhad has been named as one of the 12 defendants in a lawsuit filed by 14 sukuk holders of the 1.3 billion Max Second Highway project, alleging breaches of duty in approving interim payment certificates during construction. Master Tech Group Berhad said Tenaga Nasional has exercised an option to increase the value of its existing cable supply contract by 32.9 million ringgit, raising the total contract sum to 142.4 million ringgit. And last but not least, Sarawak Consolidated Industries Berhad is entering property development through a joint residential and commercial project in Bintulu on an 11.068 hectare land parcel, with SCIB bearing all development costs, while landowners received 23% of the project's GDV. Now that's a wrap from Midday Roundup with me, Anunjaria, on KleverStock. Thank you for choosing us investors. Stay tuned for our upcoming live stream programs coming soon.